Greetings, greetings. Welcome to this week's sector situation. I'm Wayne. My partner Ryan is working on the market outlook. It is October 30th, 2022, and it's a little bit in front of noon here on the East Coast. Let's flash what we need to, and then we'll get moving on things. Here's our trusty disclaimer. Take a quick look at that. We'd appreciate it. And then here we have the intellectual property rights notice, which of course we ask that all respect our intellectual property rights. And just to note that you should get in touch with the company in some way if you're interested in getting together with John and Pete and Ryan and Bill Johnson and AJ. I think they've got an event going there in Miami in December. So that could be really interesting. A lot of people enjoy those live events and hanging out for the weekend, so on and so forth. So might want to take a look at those. I'm starting, even though this is the sector situation, starting with review of the last week's market outlook that Ryan puts together for us. And we noted, right, this is just picking up from last week. I think we were looking to give the bulls the benefit of the doubt. We had a couple of caveats in the form of, the prior Friday, was that legitimate because of all the expiration related stuff that was happening there? And it was a little scary because it seemed like everybody turned bullish, ourselves included, wanted to be bullish, right, as a going in. But we thought, hey, it may only last so long as some of these big names report. And if those reports aren't that great, that could really, send things into a tailspin. Well, those reports weren't great at all, and the market did not tailspin. The market finished incredibly strongly on Friday, and it seems as though, right, for now, they're back in ignore the bad news mode and want to buy into, the pivot story. So we'll get into the sector shortly, but I just want to remind everyone, market outlook, that especially from last week, I'm not sure if Ryan's including it for this week that will be published today, but here's your composite seasonality for the market in the midterm election year. You can see we were noting that we're coming into that. And then here's a better look at it. In fact, I covered all these little tidbits that I felt were interesting that maybe you'd want to see in the macro measure video at the start of it. So just wanted to mention that. But let's get on to our sectors. And here's the sector view. And as we noted last week, let's take a look at something that's really clear. I think this is a great example in XLF of, right, broke through the resistance line we had working, pulled back to that level or near it, right, and then found support there and then ran strongly. And so we picked up on that, I think, right here as they closed out the prior week. And we were wondering, would they be able to, it was working out textbook, right, what a lot of folks like to see, would it be able to continue? And you could see, boy, did it, right? It just kept going. And that breakout above resistance pretty much worked virtually everywhere. I mean, almost every sector, as you can see, just performed, right, of the ones we're looking at right now, the 12 main ones we're looking at right now. And the only difference now is some are a little bit overdone on RSI. So this is its own thing, as we know, energy, but that's a little bit overdone right now. Doesn't mean it can't going. It just, right, not as safe to get in as long when you're already in theoretically overbought conditions compared to if you catch the turn earlier, right, when you were maybe down in here and you were at lower RSI readings, I'm sure, at that point. But technology finally started to participate there on Friday. Communications, I'm going to mention this. Communications, and I think the discretionary, these two are definitely lagging. So if you want, right, this just is part of the benefit, I think, of looking at your sectors. If you want to go into those sectors, look at some of those components and find the ones that interest you, that might help you prepare a short list of laggards that might become interesting if they really extend this rally somehow and they broaden the rally out, of course, heading into year end, heading into the strong seasonal time of the year that we've been noting for a while. But otherwise, right, the other side to that coin would be things that have really jammed, which are industrials, staples have really jammed, financials have really jammed here. Healthcare, has really jammed. You probably throw real estate in with communications and and discretionary, So that's our quick look at that. But I'd start to get a little worried about things that are approaching 70 on the daily RSI and that they're getting vertical. Right now, they certainly can keep going. And this is sort of one of the things I've been mentioning. I've been mentioning it on Cocktail Hour here and there. It's not as if these are things that I discovered on my own. I picked these up simply through reading. But from what I've been able to gather, right, you've got that seasonality. We know that. But I think that's been established during election years. Of course, we have that noted as well. And we had the fact that things were oversold somewhat about 3 weeks ago, and outside of lower Bollinger Bands. Plus, you've got the buybacks now opening back up for companies to buy back their shares. Insiders apparently have loaded up again after selling near the top. They've loaded up again, probably using buybacks to get themselves out of things. Just kidding, but maybe not. And you've also got, in my mind, there's supposedly a lot of money on the sidelines. Supposedly, different sources may not agree. But then I think you've got the fact that maybe there's a lot of folks that are ill-positioned or not believing in this rally. So you start throwing that and even other things together. And I think the ingredients are there for a perplexing to some rally of significant magnitude. I'm not predicting that. I'm just saying that I can't argue with the fact that a lot of the ingredients appear to be in place. Right. And we all know that these guys are tremendous at self-preservation, self-aggrandizement. They're going to try to make themselves look a lot better than they really are in terms of managing people's money by, if they can get the chance, marking things up. But at risk of getting burned again on the big news of the week, like we did last week, thinking that bad tech earnings would really probably hurt the market, and they certainly did not. The Fed, right? If the Fed, this seems to be built upon a Fed pivot, and this whole rally seems to be mainly built upon a Fed pivot argument that they've advanced several times this year, only to be whack-a-mole by the Fed, and also some bears turning bullish tactically or in the shorter run. And maybe there's even a lot more to it. Certainly, I think the dollar and TNX coming off will help as well. VIX seemed to be struggling to really get up there and punctuate this bearishness that we've seen. It failed to do that, I think. And now it's in retreat mode. But there's the background for all of it. On the flip side, it would be, right, that we get to 2 p.m. Eastern time on Wednesday, and the Fed, once again, whack-a-moles the bulls and all of their drumbeat for pivot, and says there'll be nothing of the kind, something along those lines. Maybe that would be the thing that would roll us over, or at the very least, take some of what could be overboughtness out of the market here and there. But I think, from experience that XLK, this is still a great bargain. So if they're going to expand the width of this and the breadth of this, then this is probably an area to look at. Some of the beaten down tech stocks, with rates being high and so on and so forth. It isn't ideal, but we've been taking bullish trades in here and in here, which both are not really supposed to be places to go into in terms of interest rates being higher, elevated, or possibly trending higher in theory. But those have worked well. I mean, I couldn't believe I was actually putting an XLU bullish idea in, but when you see the technicals, you see what they're doing in the market, and there's money to be made, even if it's a grinder, right? It might appeal to some of our subscribers that like those slow and steady performers. XLK, naturally, this is always a great source of opportunity, really, almost always, and that's lagging behind a lot of other areas. So that could certainly be one of interest, again, if this sustains and continues to go. But the other ones are just the laggards that I mentioned earlier. I would have no problem trading some of these really outperformers like energy. I think your financials have done really well. Healthcare has done really well. Even your staples, which aren't really great movers, I would feel good about those, even industrials. But I think I feel better about them just if they if they back off a little bit. I'd rather see a nice little pullback and then a chance to get in at a higher low where I think the momentum's turning for now. But not as if to say these can't keep going. I just feel my style of trading is more using lines and then using momentum shifts detection, or whatever you want to call it, something like that, along with the macro analysis of what the market's doing, the sector itself is doing, and how all the sectors are behaving. I like to look at a lot of different things to make me feel comfortable about what I'm doing, but it doesn't take as long as it sounds, because you just get so used to doing it, I think, after you've done it for such a long time. But here's a quick look at this SPY again. I did more detail on this in macro measure. I think maybe a little bit overbought in the short term on some of the heavier duty intraday charts. Wouldn't be shocked to see a little bit of a pullback, again, being like news neutral assumption over the weekend into Monday morning's opening. And then we see what happens with the Fed. Now, we have seen them trading in front of the Fed has been kind of frustrating, I think, a lot of times this year, even historically. But we have seen a couple times this year, I think, where they've been able to run things in front of the Fed, which might even tick the Fed off more if you believe the Fed has any credibility and really wants to see the stock market chill out for a while. So we'll see. I would note that some folks are arguing that the bond market is still not believing this pivot story, whereas the stock market seems to be, as usual, willing to go in big on that type of a story. But let's look at SMH. We always take a look at these bigger sectors that are important, and even that started to look better. You can see the SMH is, we've been noting this in different videos and so on, that RSI continues to improve. The shorter term SMAs there, the 10 through the 20, are all starting to round up a little bit. Really, beaten down mercilessly pretty much all year. I mean, this thing was practically halved from the highs of late last year. Excuse me. So that is, to some that are, excuse me, long-term investors, this has to represent some opportunity in their mind at this point. Not saying they're right to step in here, just saying that it has to, given how much of a discount it's taken since last year's highs, but not a perfect line in any way, but working through resistance as we've seen before. So, you're at 54 on your RSI. I would think, look, this thing might still lag behind, but if it gets to the 50 and closes a gap there, there's another little gap up here near the 100 there in white. This would be the natural place for this to work its way up towards, in my opinion, in the short run, if they're able to continue with this rally. And I think that, interestingly, excuse me, we had a little bit of consolidation here after we hit resistance. So even though it looks like we had this big move, and hey, that is maybe short-term overbought, I think if it can get through that 195-ish, I think it can keep going, because I don't think that this little pause right above the 20 and sort of near our newly drawn resistance line, that has to be helpful to let it sort of take some of that overboughtness out of it. And I think without the Fed whack-a-moling stocks down, I'm going to give the bulls the benefit of the doubt for now, because I just don't see us having gotten overdone. The only thing is that the stocks above their 20-day moving average, that percent has really spiked to levels that should, I think, at least concern us, maybe not worry us, but concern us, because that's been pretty money all year long, as they say, which we cover in macro measure. But this, I mean, if I'm looking for a setup, I like what I'm seeing in XHB. Again, another thing to me that my inner economist says, what? Why? How could you like that right now? But sort of a double bottom here. And you can see improving RSI readings, and you can see that it seems like to me that they're getting that participation. They're ready to go. Now, we have been, I don't want to say fooled before, but there's been times this year where the technicals looked pretty good. Nice, strong move off the low. Couple of days of treading water after putting in this move. Treading water, pull back to the 20, find support on the 20's blue, go through the 50 to the 100. I mean, to me, this looks primed to want to come up here and, again, close this gap, maybe make a move towards the 200. In the face of right? Very high rates that are crushing the housing market, at least in theory, and according to some reports that I've read. So things are really rough there already, on their way to getting rougher. But it doesn't stop these guys from putting together their nice little counter trend moves. And so I would think, look, at this thing, if again, it's unfortunate for us that the Fed is meeting this week, because if they were meeting in 2 or 3 weeks and this thing continued to look, if this was breaking out and the market was looking good, I'd be willing to go with that without question, because it's not even close at this point, right, to being overbought. It's in the 50s. If you look at it on a different view, which we will, here it is on the weekly, and it's only at 47, right? So the bigger picture stuff even says, hey, this has room to run, maybe even more room than the daily right now. So doesn't make a lot of sense. I'm going to say that. If you ask me, right, would I position myself long term in there, and I couldn't touch my money for 5 years? Hell no. But if you talk about a short term trade, right, I would definitely be willing to do that, because it's acting well at the moment. It's just unfortunate again for us that we're going to get hit with a Fed fallout. And this, again, many of you know, I hate these. I hate Fed weeks, and I hate earnings season, because they introduce noisy elements that can create reversals and sort of overwhelm the chart setups and chart complexions. And that's where I think the rubber meets the road for us, is between reading the charts properly when they're not encumbered by big news. And that's, you get a truer performance, I think, and also managing, of course, your trades is probably ultimately where the rubber meets the road the most. But that's, charting is part of management in my book anyway. Let's take a look, excuse me, at gold and silver, represented there in the XAU, and there it is. And they are, it's giving me kind of a weird chart there. Yeah, they are trying a little bit higher lows versus here, right? Getting above your short terms, bumping up against the 100-day. This is starting to clearly, right? It marches to the beat of its own drummer. It's a 55 on the daily RSI. Let's give it a weekly look real quick, and you can see that's trying to round up more. Certainly, right in the 40s, it's coming up right now. So do I think there's some potential there? Yeah, but you know what I'm going to say. I'm still hoping that these rallies, not to hurt anyone, but that these rallies fizzle out and this thing continues to just stay heavy for a while, because I plan to buy even more physical. I put some money into these physically, and I'm going to continue to put more into them. But right now, I mean, let's come up with a conclusion here. I mean, I guess you give it the benefit of the doubt with some of the SMAs rising, and you have higher lows. And I guess the key will be first taking out the 100, second taking out that high, third taking out this high, and then maybe you get something more. But I think you have to wait for, what's that high, 110.47. There's probably plenty of other flat lines just above there, or at least one or two. But yeah, let's just call it 110.47, 110.50 for now. It gets through there, then maybe we could start taking it more seriously for a short-term trade. So that covers really the main sectors that we cover. We've been trying to chart the oil complex a little bit. Is that going to give me the right? Okay, it looks like it is giving me December. So on oil, here we are. And this is also, I think, looking pretty good there, better than it has. I like how we switched over to percentages. Again, why it does that, I don't know. But this is, right, you've got a couple higher lows put in here. You struggled here on Thursday, then it came back and found support right on the 50, 20, 15, and 50, 20, and 15, let's say ganglion. And then, right, so now it looks like if it could take out this high, you've got to think it takes out that high or near there. Let's call it, let's put a number on. I can't. Okay, thanks, Thinkorswim. But if it takes out that high, I'm just going to start getting interested in it and maybe continuing. I got to say, XLE has been sort of leading and popping despite what's happening here. But this is really close to me to sort of having maybe another impulsive leg that would develop because of the breakout. It's sort of again, broke out above our resistance, pulled back even below it, found its footing, dawdled around for a good 4 sessions there, really not doing much, reasserted itself above many SMAs, pulled back. And again, if it reverses, this is almost perfect, right? Pop up above, hold and go. So you just need to see the highs get taken out at about, where are we on that? Let's say this is, yeah, this would be 89.79. So just call it, let's just be fair, we'll call it 90. Get above 90, maybe you start to see more from it. Certainly right now it's at 44 on the RSI, but as we all know, there's some uniqueness to that market that develops. So you've got to keep an eye on that. Let's kind of see what we can get. I might have screwed up on lumber. Nope, it's giving me random length lumber futures. Okay, it is giving that to me again. But these are, right, this is sort of important. They've not been all that spectacular of late after the run they had. Let's see if I can get anything else to show up. This will be better. It's not cooperating with me all that much. I feel like this isn't giving me the right read. Yeah, and it's a little bit different. So that's the November, it looks like. So this is it right here. So this is not performing all that well. Struggled, you would have to say struggled last week. So this is probably pretty dangerous. This probably flies in the face of XHB, although I don't know if XHB really cares in the short run. I think in the long run certainly would, but this is ugly, right? You would need to see this get back above the 20 and 50 to start feeling a little bit better about this. Otherwise, right, kind of acting more like I would expect it to, frankly, the way things are. But XHB, they can somehow get the gang to, they can get folks to ignore a lot of the negative developments in housing more than I would expect them to be able to. And then let's see about copper futures. We added to the mix. Again, the old Dr. Copper reference. And these are deck 22. So front, I guess you call this the front month or front contract. And these are going nowhere like they were last week. We were pretty much resigned to that. It's still there. There's really nothing to report. Clearly, you could see there on the 100. The 100, you want to start believing in something here, you probably have to minimum wait for the 100 to be eclipsed. And otherwise, right, we could probably put this is at risk of testing those lower lows. We put that line there, the next level would be there naturally, the next level would be here naturally, and then these closes right there. So, but that's not doing much of anything, falling below all the SMEs again. It's really clearly consolidating. So there's not much really to add about those. But that's really the quick sector look and some of the futures related to sectors. As I said, my wrap on things would be, just to kind of go a little bit bigger picture, my wrap on things would be that I'm going to give the bulls the benefit of the doubt. I think you closed out the week a little overbought on some of your heavier duty timeframes. So maybe you news neutral, you get some sort of little pullback and maybe some little bit of churning, and then we see what they're able to do after that would be my guess. Again, whatever the Fed has to say probably matters. I thought that last week for big tech earnings, that didn't seem to matter in the end. I still think the Fed would theoretically, in my mind at least, still matter. But again, they could even ignore something they don't like out of the Fed. But that hasn't been the case. As I said, every time they've tried to spin this easing situation, pivoting, that so on and so forth, that has failed. However, a couple notable people said that they expected to see that happen. A couple desks that aren't permabulls on Wall Street actually intimated that could happen, and so they haven't been that way for most of this year, but they're suddenly chirping that way, and that to me suggests that maybe there's a little bit more of a chance of the Fed not being so anti-stock as they seemingly have been to this point in the year. again, that's what makes it tough. But I'm hoping that the market, personally hoping the market holds us gains by the end of the week. We get through that, we get through the election, and then we get back into where there aren't these big events that can impact trading, and that people are worried about this, that, and the other thing. We can just sort of get some trending action. We can trade one way or the other, hopefully to the bull side, because I would like to have a chance to ride that, ride some strong UOA for the balance of the year. And then I believe you just have another opportunity to start positioning yourself for a rollover from much higher levels. Hopefully that would be a great scenario for trading. So we'll see what happens. It's never easy when you've got all this news impacting stuff. So we'll just do our best to stay nimble. I hope something I share with you in this sector situation this week helps you out this week. And I'll be in touch through the webinars, Rebel Pit, cocktail hour, updates, ideas, so on and so forth. Everyone have a great and safe week in the markets. Hopefully profitable too.